Good morning, ladies and gentlemen, dear traders around the globe. We from Admiral Markets say hello and welcome to our real-time daily trading idea webinar. In this webinar, we have 5 days and 5 traders, so in 5 different trading styles. We would like to screen the markets, show here some interesting trading setups, and for sure answering here your questions. But first of all, we need to show here our risk disclaimer. Be aware that Forex and CFDs are leveraged products and can result in losses that exceed your deposit. So they maybe not be subtitled for everyone, and please be aware that all we are presenting here today is just a personal opinion of our traders and not an advice for investing. So here you can see a picture from me. My name is Tim Tam. I'm a sales guy from Germany, and we do this webinar always in co-moderation. As I said at the beginning, 5 days, 5 traders. Today is Monday, but today not with Jay because Jay is in holidays. Today we have here Jens Klatt. He's also a famous trader from Germany. So in a couple of minutes more from Jay and his trading, not Jay, Jens and his trading ideas. So we have here a quick overview of some of our offerings. So for example, our bestseller, the DAX 30, we offer it for a typical fixed spread of only 0.8 point during the main trading hours. These and other products you can trade in mini contracts. So in here we have some additional information for you. So please be aware that from today the ESMA regulation started. So for the main currencies like the Forex, like Euro and USD dollar, we have only a leverage for retail clients of 1 to 30, and for indices like the DAX only 1 to 20. So here you can see some options, what you have for maybe you are able to enter a professional client. Here on the right side you can see the benefits of it. So for additional information you can check our website or for sure contact us here. If you have additional questions, feel free to call our customer service. So that's it for me for the moment. I say good morning to you, Jens. I share you the screen and you can start.
Yes, hello and good morning also from my end. Thank you for the warm welcome, and I want to say good morning also to all the other attendees here in this webinar. So yes, as Tim already mentioned, we want to have a look here at the developments currently in the markets and what data lies ahead of us. So in fact, today is not such a special day because the economic docket is very, very, very light. The same is true for tomorrow, but then from Wednesday onwards, the docket is packed with potential volatility. Hopefully this will bring us volatility, let's put it that way, with the ISM manufacturing, for example, from the US, with the ADP data set, which will usually act as kind of an indication for the non-farm payrolls on Friday. Then we have the Fed on Wednesday in the evening here, evening in Germany. It's 8 p.m. German time then. We have plenty of news ahead of us, and currently volatility is quite low, even though I want to show you here a setup which is currently moving in our direction. We were talking about Euro-Japanese yen here, and a quite simple approach based on the so-called Asia range breakout. That's a system, or that's an approach which I presented in detail here already several times in the past. It's adopted here now for the FX market. I presented it for the DAX. I presented it for the S&P, for example. Nevertheless, now you probably might wonder, okay, and what are the key parameters of this? Something which I want to make a topic, in fact, then on Wednesday. Yes, on Wednesday. Therefore, let's have a short look here at the web page from Admiral Markets. So we want to have a look at these data ahead of us here in the upcoming days, especially probably the BOJ interest rate decision. Interesting for our trade then right now. But here, the Forex and CFD webinars, you can find it via education and data Forex and CFD webinars. You have here this ESMA NUSIF deregulation in Europe 3 special webinars by Admiral Markets. One already today at 2 p.m. German time in this case, but with me then also on Wednesday and also on Friday together with I think it will be NC in this case, so Jens Janowski, and we want to have a look here at the trading strategies and how it affects, the ESMA decision affects those trading strategies. And I want to build this around this approach here, in this case for the Euro-Japanese yen, for example. And so we don't go into further details, even though you can already see to some extent what's obviously here, the key parameters, those two blue lines. They mark a high and a low, a trading range, obviously, and then we traded the breakout here on the upside in this case. So this is this dotted line in this case. So this is the stop level. You can also see it here, by the way. And obviously, this purple line acts as the trend filter in this case. So meaning nothing more than we're trading above that. In this case, it's the exponential moving average 11. We break out on the upside. We have a long trade. Just imagine we're trading below the purple line, but trading out of this range then on the upside, there's no trade, and the other way around. So in this case, everything fits here. So we break out of this range on the upside, this blue line, we're trading above this purple line, so we have a trade. And now you can also see that there's a take profit level on the upside. You can also spot it here, by the way. So the entry price was 61.5. So 129, but let's skip this because it's not adding any value here. So 61.5. The stop loss is then 37.5. So the overall risk of this trade is 24 pips, and the take profit now can be found 1.7 R here on the upside. What is an R? The R is the difference here. This is 24 pips. So if 1 R is 24 pips, then 1.7 R is 41 pips. So the take profit level is then here, as you can see, placed at 130.023 in this case. Okay, so these are the parameters for this trade. Let's just hope that the trade goes through and rather sooner or later hits the take profit level. I have to say that this is already a reduced position size here for this trade. The reason for that is because volatility is very, very, very low. Some of you might have already had a look, but if not, well, let's have this look together then. On a web page like Market Watch, you can screen the markets for their current volatility level. It's something which is really important, in fact, for not only index traders, and in case of the S&P, for example, looking at the VIX, or in case of the DAX, looking at the VDAX, but also in the currency markets, looking at a similar number here. In this case, it's the EVZ. It's the CBOE Euro Currency Volatility Index, currently at 6.77. And if you have a look here, let me just have, if you have a look at this here from a 1 year perspective, 1 second, it needs to adapt now. You can see that the volatility is currently, when only looking at 2018, it's at its currently yearly lows, which is not such a great market environment for breakout approaches in general. And with the thin and light economic docket, there's some kind of a problem, I think, that the market will take on serious momentum on the upside and go for this take profit, even though we hope for it, sure. Nevertheless, we can't be sure that this is really happening then. And so we definitely need some patience, probably at 2 p.m. German time, with the inflation coming from Germany as an indication for the inflation then for the Eurozone tomorrow, which we'll publish at 11 a.m. German time. We'll find another driver here for further bullish action. Let's just see, wait and see what happens. So now, this is it on a trade. So we can't really do anything further. So in fact, trading is, at least in my case, it's a quite boring experience because I have the setup. I know what to do, when to do it. I place the order is hit, and then I'll just see the market move in my direction and hopefully trigger in my take profit, or I'm getting stopped out. I can't do anything more than I'll just hope that the market will move in my favor. If it doesn't, still fine, because I know that the overall trading approach over a very, very long time span is still profitable. And therefore, we now want to have a look at several other markets and how the developments present itself there. So we already had we already mentioned it. We want to mention it once again. Here, let's have a look at the economic docket once again. So Tuesday, big data. Tomorrow will be the interest rate decision from the Bank of Japan. In fact, we shouldn't expect much to come here, even though I have to say that with the currency war taking on momentum, let's say, Japan is also affected by this, because Japan is known as probably the initiator of currency manipulation. We have to say it like that, because since 2012, 2013, the Abenomics here and the aggressive bond buying from the Bank of Japan pushed the Japanese yen lower on a broad front, and that's pure currency manipulation. And so the thing is that also Japan could rather sooner than later probably be target of a tweet from Donald Trump. This said, there could be some attempt from the Bank of Japan tomorrow to somehow try to down talk the Japanese yen to some extent. So the problem is they probably need to make it, or they have to think about a smart move, how to down talk their currency. In this context, it could be that the Bank of Japan reformulates their target to hold the yield of 10-year Japanese government bonds, so-called JGBs, at 0%, and could say something like, we still offer to buy an unlimited amount of bonds, in this case for a third time in a week, or fourth or fifth time or whatever, and aggressively buy bonds here, and to try to somehow that way try to push the Japanese yen lower. The thing is that it's something which is not really new to the market, and this is something which is holding back probably also volatility in this context. So in this context, then tomorrow's BOJ meeting is probably a non-event, even though from a pure technical perspective, dollar Japanese yen is in a very, very interesting spot, in my opinion, when looking here at dollar Japanese yen on a daily. So we zoom out of the chart and we can see that there's a sharp or clear defined blue trend line in this case, where the market found serious resistance several times and then broke higher. And what you can also spot here, and therefore let's zoom into the chart once again, you can see that the market found strong resistance around 111, 111.30 here several times, and then broke higher. That was on the 11th of July, so around 2.5 weeks from now. So now the push is higher, we push higher and see the retest. That was mainly induced by the comments from Donald Trump, who obviously tried to down talk the US dollar to some extent, mentioning that hiking rates in the current market environment is not very positive for US economy and all this. He does not want to influence the Fed in their decisions, which obviously means reading between the lines, he obviously wants to influence and take action on the Fed to some extent. But so the thing is, we saw a push lower based on that, and from a technical perspective, we consider this to be a classic retest of this region here. So it's a potential long trigger we're finding, and when really the Bank of Japan comes out more dovish tomorrow and really tries in some way to down talk the Japanese yen, that could be a very, very interesting region. And the line in the sand, let's say, it's the 111.50, the region above which I'd definitely say, okay, dollar Japanese yen has some serious chance to take on bullish momentum from here. So 111.50 is the line in the sand. Nevertheless, not sure whether this will be reached today or not. Okay, let's put it that way. I hope that it will be reached today. Why? Well, if you're long Euro Japanese yen, you're not only long the euro, but you're also short Japanese yen. So I'd really hope to see such a push today, because it would somehow indicate that the Japanese yen is weaker. And if the euro can at least stabilize itself then stable against the US dollar, it means that from a cross-pair perspective, Euro Japanese yen has to push higher then. But nevertheless, I think that the trigger event, if there is such an event, will be tomorrow, the BOJ, or based on the yield sensitivity of Japanese yen, probably the other news which are around the corner, like the ISM Manufacturing on Wednesday, non-manufacturing on Friday, the Fed on Wednesday, the ADP data set on Wednesday, the non-farm payrolls on Friday. So in the second half of the week, there are several other news events which have potentially high volatility, not necessarily guaranteed, but could act as a volatility driver here in dollar Japanese yen in this context. And while that's said, it definitely makes sense then to have a look here at Euro USD in this context. You can already spot that I'm obviously bearish, because what you can see is the trading range, and from here I duplicate this range and I reach a target around 111.70 to 112 on the downside. So I go for the break on the downside, and this goes obviously hand in hand with a quite bullish outlook for the US dollar. So why I am bullish for the US dollar, that's mainly due to the fact that, and I've prepared it already here, this is the commitment of traders report for last week. So it was published on Friday, and it perfectly illustrates that here we are trading in a key region around 95 to 95.30. We haven't yet made it above that level, but what happened so far is, and this is something you have to have a closer look here, but nevertheless you can clearly spot it already. The green line is the positioning of the large speculators, and the large speculators, so the big speculators, obviously anticipate a potential break on the upside here, since they built their long position in the US dollar index future to their highest since 18 months. So the last time we've seen such a high long position was around 1 year, 1.5 years, in fact, away. That was here in this region when we found ourselves in a quite sharp drop after those gains after the election of Donald Trump here. And to me, I clearly interpret this as an anticipation of a break higher. And since you should expect those big speculators to be well informed, I think chances are very good that we get to see such a push higher. Now, and this is the interesting thing for the Euro USD, and now we close the cycle here. In the US dollar index future, there is it's a basket, and 58% of this basket is euro based, which means if we really get to see such a push higher here in the US dollar index future, that means nothing more than it should correspond with at least an attack, if not a break, below 115 here, and then going lower to 112. Potential driver, again, all good data coming out around the ISM, around the ADP or the non-farm payrolls. Some of you probably wonder right now, why don't I mention the Fed? That has something to do with the following here. This is the Fed Watch tool from the Chicago Mercantile Exchange, which is showing the probability of a rate hike of the Fed then on Wednesday. Here you can spot, it's currently, this is the current rate level. It's 175 to 200 basis points. It's currently 97%. So it's nearly a done deal that nothing will happen. It will be a 100% reformulation of the latest or of the last statement from the Fed. So we shouldn't expect any big news to come from here. And with this said, I mean, chances are very low that in the evening around Wednesday, then when the Fed gives their statement, big volatility will happen. But it's a done deal that nothing will happen, in fact. So the main driver for volatility, especially are the non-farm payrolls into the weekly close. So that's it around the euro. And finally, I want to have a look at the probably most interesting news event this week. So we want to have a look here at pound sterling, which is currently still forming such a bullish divergence. And all in all, some might already say, okay, that looks bullish. The only problem is that on Thursday this week with the Bank of England, chances are good that we are probably see a drop lower, a sharp decline here. The reason for this is very, very simple, because the Bank of England is already expected to hike rates here by right now 90%. We already had this, by the way. It's not the first time in 2018. The first time when we saw a probability of a rate hike of 90% in 2018 was around here, when we went for new yearly highs and then saw this sharp drop to new yearly lows, in fact. That was induced by bad data coming in, and also Mark Carney, the president of the Bank of England here, mentioning that there's enough time for a rate hike in the second half of 2018, and then we shouldn't expect too much to come here. Not sure why he mentioned this. I mean, sure, he could bring up the potential slack in the UK economy, even though I have to say the latest data came in quite good, to be honest. So it was probably because he's not very sure about the Brexit and how the negotiations go here. And not only that, but also how it potentially affects the UK economy. And when taking this into account, it becomes obvious why I think that chances are good that we go lower from here and below 130 instead of moving higher. The reason for that is in fact very, very simple, because I think it will be a dovish hike. So the Bank of England will definitely hike rates on Thursday, but within their statement, I think they will emphasize the uncertainty of the UK economy based on the Brexit negotiations. And with this in mind, chances are good that the market will then sell pound sterling, because it will be kind of a one-time event, one which is already priced in completely right now. And I mean, look at this current performance of pound sterling. I mean, the currency is already expecting a rate hike, which is usually positive for whatever currency we talk about, in this case pound sterling, and we can't really take on bullish momentum, and we can't really break, but at least interrupt the sequence of falling highs and falling lows. And with this in mind, I have to say that chances are higher that we push lower from here than we go higher. And by the way, and now this is something which is probably also interesting from an ESMA perspective. I want to have give an outlook for currency, which some of you probably don't have on the agenda very often. We're talking about pound against Canadian dollar. And in fact, we are very, very interesting here in a very, very interesting region around 170.50 around. Why do I mention this? Next week on Tuesday, and then, so next week on Tuesday, okay, that doesn't work. Well, whatever. So next week, and therefore I've presented the following. So GBP, we have a seasonal pattern in which we enter here. So from the 7th of August till the 13th of August. So it's only a 6-day period, but very, very interesting. So first of all, based on ESMA and decision which is coming into effect, and also here at Admiral Markets today, the leverage now for this currency pair is 20-1. So when looking at GBPCAD in this case, it's one of the currency pairs which doesn't have a leverage of 30-1 like the majors like EURJPY, but it's 20-1 since it's a minor currency pair. And that means that for 1 minute lot, for example, 10,000 units, you have now a margin requirement of 500 euros per contract in this case. So this is something you have to make sure before entering such a trade if you are not classified as a professional trader. But if you're classified as a retail trader. And now the interesting thing about this is the following. Now let's come back to the seasonal pattern. So my overall outlook for pound sterling obviously is not very positive. So I'm skeptical. And in fact, from next week, Tuesday, the 7th of August, till then Monday, the 13th of August, GBPCAD enters a seasonal short period. And over the last 23 years, in 19 years, we really closed lower. That equals to a hit rate of 82.6%. And we saw an average gain on the short side of 187 pips then in GBPCAD in this case, while the average loss for those 4 times it doesn't work out came in at 79 pips, while the biggest drawdown, in fact, was something like 22 years ago, was 115 pips. The market moved against us. So within this period, when we entered the trade short here, and closed it on the 13th of August, the loss was 115 pips. So why do I mention this? It perfectly fits my fundamental outlook for GBPCAD. And look at this from a technical perspective. So if we go below 107.70.50, chances are very, very good that we will get to see a push probably lower to 167.50. So from a technical perspective, from a seasonal perspective, and also from a fundamental perspective, GBPCAD looks like a very, very interesting currency pair to watch. Definitely one you should put on your watch list, and becoming interesting from next week, Tuesday. Okay, so let me just go through the questions.
So yeah, well, Jens, first of all, thanks for your showing us here some interesting setups. We have a couple of questions. For example, maybe you said about something your breakout trade. So some of our listeners ask for how you trade this breakout exactly.
Yeah, so let's do it then probably here for GBPCAD. So when I see such a region here, like this low, as I mentioned, around 70.50, what I prefer to do is, in fact, to trade the break directly, which means in this case, I place the sell stop in this case here on the downside. Now, the only problem we probably have is that the stop will be placed here at 72. Well, it's nearly 70. Yeah, it's nearly 73, in fact. So it's 250 pips risk, which is kind of a bit too much, probably. I mean, it depends on the position size you plan to have. But what I then do is I go down into the hourly chart in this case and look for the latest relative high in this context. So meaning nothing more than if I go for 70.50, which is so around here, I place the stop above this level, which is obviously, as you can see here, reducing the risk then by around 150 pips already. From in this case 250 to around 100 pips. So this is so I prefer to trade breakouts. So look for the region where I expect the action to take place once we break lower, which is this region 70.50, and then go down one time frame, in this case to the hourly or the 4-hour chart, and place the stop on the, in the case of a short position, latest relative high. Yeah, that's how I trade such breakouts. By the way, very nice to see, by the way, that someone just said Dr. Klatt. So I'm not a doctor. I just want to say that.
Yeah, I see it too. So I need to smile at that, like you said, Jens. So yes, so for the moment, I think that's it. So yeah, we see us, I think, next days because yeah, Jay are already in holidays for the next weeks. Yeah, thanks again, Jens, for you showing us here some interesting trading setups, and thanks for sure all our listeners. You are always welcome to our Retail Daily Trading Ideas. So we are back tomorrow at the same time. Feel free to join us here. So yeah, have a good trade and a good day, everybody. Some last words from you, Jens, if you like.
Bye-bye also from my end, and thanks for having me here today.